welcome to Leaders of Tomorrow, India's largest platform for entrepreneurs. I'm Sunanda Jaiseelan. All of this week, we're putting the spotlight on India at 75, a special series where we're looking back at India's past 75 years and looking forward to what the next 75 years are likely to look like. With that, I'm going to invite on the show someone who needs absolutely no introduction, someone who's joining us for the very first time here on Leaders of Tomorrow to speak with you directly about what it means to stay invested in the markets, what it means when we're talking about the stock market valuations, what sectors should you perhaps be looking at, all of that in a very freewheeling conversation. It's my pleasure to welcome on the show Raamdeo Agrawal, Chairman, Co-founder, Motilal Oswal Financial Services. Thank you so much for your time here on the show, sir. It's your debut with us here on the Leaders of Tomorrow, but you, of course, are someone who needs absolutely no introduction. We feature high-profile thought leaders like yourselves who have stayed the course when it comes to whatever industry that you've chosen to associate yourself with. And in all your comments, in all your interviews that I've been reading up on, a couple of words that you've used that really stuck and sort of stood out to me. And one of those have been passion. Starting where you did nearly 4 decades ago to where you are now, one of India's biggest faces when it comes to investing and one of the biggest authorities when it comes to the stock markets. A very brief recap of perhaps what you think has helped you stay the course. Would you say it's passion? Would you say it's just keeping at it? What has really helped you? What would you like to kick today's interview off?
Actually, Bhimi was very humble, like any other guy, any other entrepreneurial stories. If you go back into the history, so my family comes from a farming background from Chhattisgarh. So I pursued with single focus that I would like to make my career in stock market, and we want to make a lot of money. That was the kind of thing. And so my passion and profession, it became one. And that is the biggest luck anybody can have, where your passion becomes profession. And that's what really happened. I never worked since then. In last 40 years, I never felt going to office is a pain, or working late is a pain, or having trouble is a pain. Market is down is a pain. No, nothing. Everything is fun. So that's what really happened. And though I was dealing in a very greedy kind of environment in the stock market, you meet a lot of people who are very greedy. They want to make a lot of money very quickly. But we had a very well laid out this thing that we want to make money at in a slow fashion, but over a period of time, we'll allow the power of compounding to work on our wealth, and we will make money. We'll make significant money. So we know we are going to make money, but we had a lot of patience to make money, and that's how we just kept on doing things. And as you become bigger, more interesting things happen. I mean, you cannot visualize when you are at ground floor what is going to happen on 10th floor. When you are at 10th floor, you don't know what is going to happen on 50th floor, and when you are 50th floor, you don't know what it looks to be on the top floor at 107th floor. So that's the game. We are maybe at 25, 23rd floor. We are still, I would say, another 75 floors to climb.
You're on the top floor though, Mr. Agrawal, and you have the bird's eye view. What's it looking like when we're looking at the domestic stock markets in the short to mid-term?
Yeah, so, stock market is one thing which is, I have seen in last 40 years. I mean, when I bought my first stock in 1980, the index was 100. Now the index is 52,000. So it has moved up by 500 times, over 500 times in front of me in last 40 years. So I don't have any reason to believe that journey is going to be any less exciting starting from here. But when you talk about 15% compounded for next 10 years, it becomes 4x. In 5 years at 15% you double, and in 10 years it goes 4 times. So from 50,000, you are looking at 2 lakh index for sure in 10 to 12 years. So that's the kind of, now that is not going to happen tomorrow. it's not going to happen in straight line. There are going to be corrections. There are going to be collapses. And so it's a journey of some kind of you see the graph of any rising stock, like that it will go. I mean, what we have seen in last 40 years, there are so many ups and so many downs, and yet finally we have grown by 500 times. So I see the markets growing by 10 times, 4x to a lakh in 5-6 years, and 2 lakhs to 200,000 now. How do you find the winners? How do you play the game? This is the underlying kind of situation. Now you have to put the game in such a way that you disproportionately benefit. Because one of the things is, it's not a democratic place. It's not a place where everybody wins same.
Yeah.
Here the wins, and there are a lot of guys who will go in that 10, say in 4x market. A lot of people will go 400x. Sure. And a lot of guys will lose 80-90% of the values. So you have to figure out your every single drop of saving is in right place. It is not a gold market. If gold goes 4 times, everybody will make 4 times. But in stock market, that doesn't happen. There are a lot of unevenness. Some people, they completely get washed out, and some people, they become disproportionately rich. So you have to play the game very carefully.
I was looking at something that you have said previously, that not even the trinity of gods can really time the market. You just said you have to know how to play the game and play it right. What are perhaps 1 or 2 things that you want to advise for someone who's looking at the markets? Staying the course, I would presume, that is something which perhaps is going to help. But anything that you would like to advise our viewers through this interview?
Benjamin Graham, he said to make money at the rate of what market makes. So market does about, say, 14-15%. Making money at the rate of 14-15% is much easier than what it is made out to be. But making money at 20-25% is far more difficult than most of the people they think. And in the process to make money at 25-30%, they don't even make 15%. So that pitfall has to be avoided. And you must know how good you are, whether you have a chance to win. We have right to win in a particular way. That you have to really figure out. So those are the things I would say that every investor who is entering the market, I mean, almost few millions are coming every month, So clearly, these are the very different times, and stock market is becoming very widespread thanks to digital economy, digital way of approaching the customers. So clearly, the story is going to be very big, and rapidly we are going to see participation increase. In next 4-5 years, the spread of the market may go from 2% to maybe 10%, 12%, 15%. US is 55%. So nothing stops from going to 25%. In next 10 years also, if you go to 25%, we are talking about gigantic, kind of a market opportunity. So, but then there'll be very few winners. I can tell you this. Sure. Very few winners, and the guys who will win, they'll win very big. So how do we win big in the years to come, decades to come? That's the game. So there are 2-3 things which I think which has helped me and which will help everybody over the period of time. One, you got to be optimistic that country is going to go from 3 trillion to 6 trillion and 12 trillion and 24 trillion over a period of time. Every 7-8 years it will double. So that should be the faith, because that's what has happened in last 40 years. There is no better way to figure out. You don't have to be macro analyst to figure out what I'm saying is right. I mean, that's a faith. And there are a lot of factors for which I'm saying. So I think the last 40 years has been fantastic, but next 40 is going to be super fantastic. If I tell you a few things, I will take it up a little later. But that's my belief. So that's the first way, that you got to be optimistic. Have positive mindset. If you have too much of bearish thought process, I think that will derail you from your belief. So you got to be firmly, like you want to do chartered accountancy, you got to be very clear about it. Every 6 months, if you keep questioning whether I want to become chartered accountant or whether I want to become doctor, I don't think you can either become doctor or you can become chartered accountant. So you got to be very firm, that positive mindset. Second, understand power of compounding. Day one, it's the simplest thing. Everybody has heard. Very few practice it, and very few of the few, they actually understand the implication of it. So getting to understand power of compounding is the first thing. It's like a KG ABCD lives. understand power of compounding. Everything is CAGR, CAGR. But what is CAGR? That's compounding. So that you must understand. At the rate of 25, in 10 years, it becomes 10 times, in 20 years, 100 times, in 30 years, 1,000 times. That's what you need. So second is power of compounding. And third, the trinity of gods, Brahma, Vishnu, Mahesh. All three cannot predict the market. So you don't try. Don't try to predict the market. Your blood pressure will be low, your sugar level will be low, and you'll be very healthy if you don't predict the markets. So I would suggest you be very simple guy. Invest in what you understand. First thing is, do anything you do in the stock market. I would say do it only if you understand. If you don't understand, stay on the sidelines. And then I think power of compounding and time, the patience will take care of everything.
So I have to take a quick break on that note. We're back in just a moment. Welcome back with us here on Leaders of Tomorrow Icons as part of this Leaders of Tomorrow special series, India at 75. We're continuing our conversation with Raamdeo Agrawal. I was looking at some comments that you had made on some international stocks. I don't want to particularly name them, but on some US-based companies saying the valuations are bizarre. Since you are talking of pitfalls, as India is growing, how does the Indian stock market, how do stocks in the mid to short term here in the domestic markets, how do they ensure, even as we're seeing this gold rush on Dalal Street, the pitfall of being overly valued perhaps? How do we ensure that these kind of bizarre valuations are not being attached to our domestic stocks or to our domestic markets?
Yeah, so these are phases of the market. We have seen many phases of the market. And sometimes the entire market is overvalued. Sometimes a section of the market is overvalued.
Yeah.
But it's a part of the game. In a stock market, you'll never find everything perfectly valued, which suits the investor. It is not for them. It is the nature of the beast that something will be overvalued, something will be grossly undervalued. Even today in the markets, there are some things which were very highly valued in 2008 are completely in the basket today. And something which was in basket 3-4 years back is today valued like big time. Yeah. So, like I'll tell you a story of Infosys, which is the biggest and the most respected growth stocks India ever had. Mm-hmm. It is up 6,000-7,000 times in last 25 years of its journey in the stock market. They got listed sometime in June 93, and today they must be up like 7,000 times. So, but then the company got listed at 12p multiple, went to 200p, came down to 12p again, and now it is at 30-32p. So, the kind of, but if you see, fundamental thing in the stock market is price and value. Price is what you pay, value is what you get. So now knowing the price doesn't have any edge. Everybody knows the price. Price is no different for you or me. But knowing the value is the key differentiator. Now, there are very few guys who want to go through the process of understanding and estimating. Values are always estimated. Estimating value before investing. If you understand the company, you will be able to estimate. If you don't understand the value, if you don't understand the company, obviously you cannot put a value to that. So clearly bringing that discipline of seeing the price value gap is the key to investing process. And if you don't understand something, please don't put your money into that. That's a simple thing to do.
I was looking at a recent tweet of yours, Mr. Agrawal, where you said if the narrative doesn't support the numbers, then perhaps you should be rethinking what you're doing. I just want to, I do know you cannot comment stock specific, but we're talking about one of the largest IPOs on the market in recent times. And I just want to read out some numbers. The IPO valuing this company, when we're looking at, the kind of valuations between what they've raised and what the company is being valued at now. I would love to get your, the big picture, your big picture thoughts really on what is happening as far as the Lal Street is concerned when we're talking about the IPOs. Recent reports are saying almost 100 IPOs are expected by the end of 2021. What's really driving this gold rush, sir? And do you expect that this momentum will continue going forward, and be able to sustain in the next, say, 10, 15, 20 years? Are you expecting this buoyancy to continue?
So this IPO market is very seasonal, particularly in India, is extremely seasonal. It's like you go to temple opens for darshan for 2 hours in the morning and 2 hours in the evening. So it is something like that. This IPO market opens up in 3-4 years for 5-6 months, and you do excesses. The companies which are through, they are through. Otherwise, it remains shut for rest bulk of the year and bulk of the years, I would say. So is that kind of thing. That has been the tendency. So this time it has been very intense because it opened up for after a long time. A lot of companies were waiting in the wings to get into the public issue, and this coincides with 2-3 things. One is the collapse of fixed income. The fixed income rates, thanks to COVID and everything, the global this thing, abundance of capital and all, the fixed income rates have come down to 5-6%, and that is and short-term money is even lower than that. And then liquidity, see, along with the collapse in the interest rate, there is a massive amount of liquidity chasing. So there are almost 8 to 10 lakh crores every day excess money with the banks. So this particular liquidity is lying with a lot of SMEs, businessmen, individuals, undeployed anywhere. Businesses are weak, so business working capital is also not being very high, and it is looking for some speculative gain. And that's where the IPO funding comes. So the way today you can do IPO is in 7 days kind of a lock-in period. You can borrow big time at 7-8%, like a guy with a crore rupees, kind of 1 or 2 crore rupees of net worth can borrow, say, 50 crores or 100 crores, puts up the application, and he waits for that 2-3% allocation, and on that he looks for 50% pop-up thing. So this, what do you call, low-hanging fruit or the free ride, people are looking for, and you win in one, you go with a bigger conviction the second one. That's how this thing has become. It has become a 2 lakh crore kind of a kitty by the banks and NBFCs and the brokers all put together. And so this cannot last. I mean, here there is a complete disconnect between the primary market valuation and the corresponding company in the secondary market. So if you have a, say, some chemical company. Now, chemical company of the same caliber, if it is new IPO, then it will trade at 100 P multiple. But if it is already listed, more credible company in the marketplace, that would be available for 45-50 P multiple. That 45-50 is also not low, but I mean, in IPO market, and your knowledge about the new company is also very low, despite that price is double.
Sure.
So this cannot go on for a long time. Either secondary market has to double up from here, or primary market, which is made up of that, what do you call, 20-25 companies, they have to come down to earth. And that's what will happen. Always the secondary market has the gravity to pull the primary market overvaluation to the ground. And that now, whether it takes 6 months, 1 year, only time will tell. But this is bound to happen.
That's all we could pack into part 1 of this episode. Part 2, though, is coming up. You stay tuned for that. For tonight, it's a wrap. Thanks for watching. Have a good night. How many years do you think it's going to take for Indian companies, tech companies, to perhaps become the largest by market cap? Of course, you have the outliers like the TCS, etc., but they're very few and far in between. Should we aspire to see our tech companies also become some of the largest by market cap? Is that a model that we should be looking at?
I mean, these are all future. I mean, what has happened in America and China is bound to happen here. It's almost a certainty, but will it be to that extent? You know, in the sense that will it be, say, in US, maybe 7 out of 10 top companies are tech companies.
Yeah.
You know, so will it be that intense? I don't know. But essentially, TCS is number 2 company. You know, after Reliance, second largest company is already this thing, and fourth largest is Infosys. So already in top 5, 2 tech company, Indian tech companies are already there.
Sure.
So whether they will dominate after 10 years or the completely new companies like Zomato or other companies which are coming in, they will come into the picture and become very large because they are free, they are friction free, they are asset light, they can scale up very rapidly.